It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Tuesday evening, August the 16th, 2016. Cruising our way through this third full week of the month of August. Almost end of summertime here. Don't forget, we got Labor Day weekend coming right around the corner. We'll talk about that here next week, though. We got a busy plan here for you guys tonight. Crude oil and the euro are bullish, while gold and the S&P are bearish going into Wednesday's trading session. Boy, I have another great newsletter in store for you tonight with plenty of reliable trading opportunities setting up tomorrow. But before we get into those charts and set up the strategy for tomorrow, I do want to remind you, the only place to watch the full-length version of our newsletter is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of the YouTube video. Follow that link. Come join me here on the blog for the full-length version and all the analysis covering all four markets. While you're here, don't forget to grab your free pass to come out and join me as a guest in the trade room this week. If you're not a member here at schooloftrade.com, grab your free pass in the upper left-hand corner. In the lower left-hand corner, join the mailing list. I'll send you an email every evening when our nightly newsletter is ready to be watched. You can download the charts for tonight's video right below the video tonight. Right where it says click here to download today's charts, you can download all the charts and have those on your computer for tomorrow. And as I always remind you guys, you're going to learn more with me in 1 week on my free trial than you will anywhere else on the interwebs. Join the trial membership on the right-hand side of the website. There is also a spot to register on the homepage of our website at schooloftrade.com. All right, guys? Hope you fasten your seatbelts and buckled up your helmet. We got another busy schedule here for you guys tonight. Before we jump into charts, though, don't forget, let's check the calendar here for tomorrow. Tomorrow's Wednesday, which of course means we have inventories tomorrow. We're going to kick off the session tomorrow with all the European traders tomorrow with the labor market report tomorrow morning at 4:30 a.m. Eastern time. Don't forget, our chat room will be firing on all cylinders tomorrow morning at 3 a.m. Eastern time in our chat room here at School of Trade. We get the labor market report at 4:30 a.m. to kick off the London session. And then, of course, we're going to hop, skip, and jump down to 10:30 a.m. That'll be the petroleum status report tomorrow morning, otherwise known as the inventory report tomorrow. Don't forget, inventory day on Wednesday is a different type of animal. It's expected to be a little bit lower volume if you're a crude trader with us tomorrow. So get in early. I'm going to avoid that news tomorrow, 15 minutes before the news, 10 minutes after the news. So we're going to be sitting on hands for crude trading tomorrow between 10:15 and 10:40. Get to it early before the news or get to it after the news comes out, but be very, very careful trading too close, 15 minutes before, 10 minutes after, and of course, we'll be doing it all together with our students tomorrow morning. We open up our trade room at 8 o'clock Eastern time tomorrow, and of course, if you're with us tomorrow afternoon in the chat room, we'll have the FOMC meeting minutes at 2 p.m. Eastern time. So, of course, 4:30 a.m. tomorrow morning, we kick it off from Great Britain in the London session. 10:30 a.m. in the trade room tomorrow for the inventory report, and of course 2 p.m. Eastern time tomorrow, those highly anticipated FOMC minutes, right, will be in the chat room in the afternoon session. Then tomorrow night, we get some news from Japan, got some news from Australia. We'll talk more about those in tomorrow night's newsletter, because those, of course, will happen after the closing bell tomorrow. Tomorrow's inventory day. Watch the time. And don't forget, the S&P 500 is closely tracking crude oil. It has been lately. It's not tonight so much, but we'll keep an eye on that tomorrow, because oftentimes the inventory report for crude oil will move the needle a little bit tomorrow for the S&P 500. Don't forget, you need a plan for news. The plan is to trade around the news. We are not going to trade that noise, right, that comes around that economic news. You get the plan, follow that plan for tomorrow. And don't forget, we're going to be with all of our students tomorrow morning at 8 o'clock Eastern time in our trade room. Chat room opens up at, well, chat room never closes with our London traders tomorrow morning at 3 a.m. in the chat room. Let's go crude, S&P, gold, and maybe a little bit of the euro. Little bit some sloppy markets here tonight. The crude oil looks beautiful though. S&P, gold, and euro are a little bit sloppier, but we get a good plan of attack here for tomorrow. Crude is bullish and trading at the highs of a bull channel this evening, which tells the buyers to stay patient and look for opportunities using short-term corrections off the highs tomorrow. Buyers have control and will be looking for seller failures below the moving average and pullback trades above the moving average as long as they aren't buying into resistance targets overhead. Sellers don't have much room at this point. With the correction zone and the low of the channel acting as support below, they will need to get and stay below that 45.84 triangle support if they want to have any hope at taking control of this market tomorrow. This is a very, very bull market right now. We obviously been talking about this for a few weeks now. It feels like there's a big bullseye up at that $50 a barrel, and I'll keep taking this 50 down to 40, back to 50, down to 40. We'll take that. I'll take that the rest of my career, thank you. We can stay right in this range here because as day traders, we really don't care what the price is. All we care about is getting wide ranges, and this has been a fantastic market over the last few months, really ever since the beginning of the year. Had some big ranges, a little bit of a lull right there in the spring, but boy, oh boy, this has been a great summer. Now, it's obviously a bull market. The two main, maybe three main components I would say right now. First of all, the large bull channel. And you can see we're trading right up at the high of that large bull channel. That tells me the most reliable trades are going to be with a deep pullback, right, and buying those lows, right? That's where the most reliable trade will come, buying the low of the channel, even that 45.84 support area there, right? Around the low of that channel. That's where the buyers really want to be digging their heels in tomorrow. Now, with that channel high, we also have a spike in channel. Spike and channel. That spike in channel, you'll notice, is setting up right at the high of that bull channel. What that means is pretty much the same thing. We want to look for buying opportunities in the correction zone, deep pullbacks on the way back up. We don't want to buy the high of either one of these channels. I don't want to buy the high of the spiking channel. I don't want to buy the high of the big bull channel. Now, whenever we see a spike in channel lining up at the high of a bull channel, that tells us there is some significant interest in this price going higher. So we know the ideal, right? The ideal is to get down into that correction zone, get down to the low of that channel, and then look for that move back up. That's where the most reliable trade is going to be. But we oftentimes see a breakout, pull back and go in these types of situations because clearly, right, look what happened here, right? Price pulls back, it's immediately bought up. That wouldn't be happening if this market was in a more balanced state, right, with rotation from low to high, high to low, low to high, which we expect in just your typical bullish market, looking for rotation back down to the low of that channel. So clearly there are buyers who are all over this market right now, right? As this price pulls back, that tells me not to be too surprised if this thing just punches higher here. And ultimately what you're going to be looking for if you're a buyer right now is a very strong breakout pullback, and it needs to stay above the high of the spiking channel, and it needs to stay right above the high of the long-term channel. The only trouble we have, though, is you can see there's a bunch of resistance in the way. You have the triple measured move, A to B, C to D, triple measured move drawn off that lowest point of the pullback. That's resistance. We have the double up, taking the first two swings of the session, doubling up. That'll be resistance. So the only thing I worry about is that if it is a very strong breakout, it may get those targets filled. And if it does fill those targets, now you're not going to want to buy that pullback now. What you're going to want is a strong breakout pullback that doesn't reach those objectives. The market is always moving towards an objective. If it's not going to rotate down to the low of that channel for us, then that tells me the objective is overhead. It'll be back to the high of the channel, obviously. That's an easy one. But more importantly, though, it'll be that triple measured move and the double up. So if the price goes higher, buyers, again, this is not going to be the most desirable, but this will be pretty much the only option, will be that breakout pullback if it does push higher. Again, like I said, be very careful, though, if it gets all the way to that target and then pulls back. Because then most buyers will have taken at least a portion of the position off, and there won't be as much emphasis to go back up again. If we do get those targets filled, then we look for that two-legged correction, trap low, and then back up, which is typical when the market reaches an objective such as a measured move, right, and a double up. So as this price goes higher, breakout pullback before we get to that target, stay above the high of that channel. Again, it's not what I'd like to get, but it may be the only choice we have here. If it does just punch higher, and again, if it does just spike and achieve those targets, then look for that two-legged correction, seller failure, and then back up again. Again, making sure you have enough room so you're not buying into that overhead resistance. The ideal scenario here would be if price pulls back. Now, we have news tomorrow, so this will be a little bit of a guessing game right now. Sellers barely have any room right now, right? There's very little room here right now for sellers to participate. But ideally, sellers will be looking for a new lower low, hold the pullback, and that's about all they have to work with there. And then, of course, buyers will look to come in and grab that move as it gets back going to the upside. So sellers have a very small window to the downside before they start selling into this rising support trend line at the low of that channel. So be careful if you're a seller. Really right now the big thing is looking for seller failure and then breakout pullbacks here for those buyers coming in off the low of that channel. Now, in my opinion, it's really not going to be until we get below that 45.84 area, which of course is a triangle that formed earlier on today. That will likely be kind of the line in the sand here for those sellers. So again, as this price goes lower, watch out for buyers scaling into this as it pulls back. The seller's really going to see a strong push down and then hold it. If they can hold below that 45.84, then they will have control of the market, but more importantly, they will have got the buyers on their heels. The buyers will be really won't be in a very confident position at that point, and that's what you need to do right now if you're a seller. If you're a seller, you need to see such strength to the downside and then hold that pullback below the 84, almost as if to tell the sellers, we got this, and also to tell the buyers, back off, right? It's our turn to play with the ball for a little while, and of course their objective will be to get back down to that low at 45.34. So as this price, again, if it spikes higher, you know the plan here for if it spikes higher, it's all going to be what happens if it spikes. Whatever you do though, don't get caught trying to buy into the high, right? Get above it, hold above it, and go, and you know the objectives are waiting overhead. We'll play it by ear tomorrow once we know more about if it does spike higher. As it goes lower, buyers looking to buy the low. Buyers looking to buy the dip into 45.84, and then if we can get a real strong push through, clear some open space, that's when those sellers can get the job going to the downside at 45.34. The big variable tomorrow is going to be the inventory report at 10:30 a.m. Eastern time. You never know what that's going to bring, right? So we'll be with us. We'll be with all the students tomorrow morning in our trade room at 8 a.m. Eastern time, and we'll do it all together for that 10:30 news. Now, I have to admit, the S&P might just win the award for the ugliest darn chart I think I've seen all year. Print this one out and bring this home to mom, because this is a pretty, you've almost got to work really hard to be this ugly. This is a very ugly chart you can see tonight. Not a lot of consistency. There's a bear channel, there's a triangle, there's a whole slew of overhead resistance. And I'll tell you though, what really gave me a little chuckle, this is the laugh of the day today. Kids, don't sell into support. Some poor soul got filled down there, and this is the S&P, right? So the magic number on the S&P is 4 ticks. If you don't have 4 ticks, right? This is the S&P. It's not Crude. This is the S&P. If you don't have a point of room for at least a point, I know it sounds so small. This is the S&P we're talking about, though, right? It's a steamroller, highly liquid. There was 3/4 of a point right here. 3/4, 0.75, not enough to get down to the double down, and look what happens. Beautiful sell candle off the breakout pullback. Who is the poor? They obviously don't listen to my newsletter. That's what happens when you sell into an area of support. You get filled on your short, and then you get your head ripped off, justifying the smart sellers waiting up top and waiting to take the money from you and then slam it right back down to finish the job.